And welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, June 22nd, 2020, and I am pre-recording this Trading Places Live for Tuesday, June 23rd. Currently, we do have futures slightly higher after a pretty decent day on Monday. Normally, the Monday after options expiration is not very good, but we did finish in positive territory. Had overall what I would call a pretty good day, so we'll get into all that in just a couple minutes. First, as far as the agenda for today, I will start off with that daily market recap. Then we're going to get into talking technically. I'm going to take a look at the transports, go over a couple of charts with you there. Then we're going to get into break it down. I'm going to go a little bit even deeper into the transports, going to break down the truckers for you. I'm going to go into a few chart breakouts, talk a little bit about earnings spotlight. Some companies going to be reporting later this week, and then we'll wrap up the show today with 3 you must see. Before we get into any of that, I do want to just point everyone over to earningsbeats.com. You can easily subscribe to our free Earnings Beats Digest. This is a publication, comes out Monday, Wednesday, and Friday morning, usually before the market opens, but if not, shortly thereafter. All you have to do is go in, put in your name, email address, click the subscribe button, and we will make sure you get added. No credit card required. And if you ever want to unsubscribe, simply just let us know. We'll take you off the list. But I think you'll find it to be a very educational newsletter and also give you some trading ideas, certainly from time to time as well. All right, let's jump into the daily market recap. Take a look at what happened on Monday. You can see the Dow Jones Industrial Average finished up 153 points. The S&P 500 was up 20. The NASDAQ up 110. So a really strong day. It didn't start off that way. Started off pretty weak, but we did rally throughout most of the day. NASDAQ leading by the end of the day, but mid caps, small caps also finished in positive territory. And these general uptrends that we've been seeing now for a few months continuing to persist. There may be still a lot of folks out there expecting us to roll over and go back to those lows, maybe even break those lows, looking for, a more of a secular bear market. I think exactly the opposite. I believe we're in a secular bull market, and I think we're just getting started. I really do. I think that we could have some congestion depending on what happens with the virus and the reopening, and there could be some stumbles along the way. But I believe once this virus is behind us, I see much, much higher prices coming down the road across all of our major indices. As far as the sectors go on Monday, you can see technology leading. Technology is almost like the new defensive group. Anytime the market's been weak, it looks to technology, and when the market's strong, it looks to technology. So it doesn't seem to matter. But technology, another great day, up almost 2% on Monday, finishing back at 103.88, getting very close to breaking out above the high that we saw earlier in June, up near that 105 level. Consumer discretionary also up more than 1%. Those were the only two groups above 1%. Utilities had a good day, though, almost up 1%, and came at a good time. We were down just below that 50-day moving average. This is one group, looked like maybe it was rolling over. But I think if you connect these lows here, you've got a trend line. I don't believe it'll be broken. I'm not a big fan of utilities. I think the market goes higher. I think utilities will lag, but I do expect them to go higher. Financials, not so good today. You can see down 0.5%. That was the worst performing sector. And healthcare. Healthcare had bounced pretty nicely off the recent lows, but it also joined with the financials. Didn't perform too well on Monday. I think it's just sideways consolidating. I think the big move in healthcare is going to come when we get this breakout above about 104. So we still got a little bit of work to do there. Okay, moving on. How about the 10-year Treasury yield? Well, the only thing we had out today was existing home sales in terms of economic reports. And, the economic report came in a little weaker than expected. I actually thought existing home sales might come in higher than expected, but they came in below expectations. Didn't seem to matter too much, though. We did have the 10-year Treasury yield down at about 0.67% early in the day. We did recover by the close to finish back up above 0.70%. And this is kind of a longer-term trend line that I would be watching. It's continuing to hold. Also, we've had multiple support tests down here at about 0.65%. So I think as long as the Treasury yield stays above 0.65%, I think equities will be fine. I think if the 10-year Treasury yield were to go below that level, I think that's going to put a little bit more pressure on equity prices to sustain their move to the upside. So that'll be worth watching. Keep an eye on the Treasury market. Check out this 10-year Treasury yield, and let's see if we can hold that yield support area around 0.65%. As far as Tuesday goes, we do have June PMI composite flash coming out. The estimate is for 45.0. In May, 36.4 was the number. So we're looking for a pretty good increase there. May new home sales expected to be 630,000 units. April was 623,000 units. So we're expecting a little bit better news in home building on Tuesday, maybe better than what we saw on Monday. We'll see. Let's see. Let's move on to talking technically. And I want to get into the transports. Now, if you look at the transports, obviously big move down back in February, March. Of course, that's everything in the market took a big dive there. But as we were moving up in March and April, notice the accumulation distribution actually went down to new lows. So transports, I don't think looked very good then. However, mid-May is when a lot of places were starting to reopen, and we got a big boost from airlines. Airlines have been lagging really badly, but airlines started to kick in. And that's when the entire transportation group really had a nice run up from mid-May to the first week of June. We've since pulled back, but I think we're okay still. When I look at this chart and I annotate it, I think that there was a pretty good breakout that came in right at about the 8650 area. There was the breakout, moved all the way up above 10,000, came back down to about 8,700, bounced, and now I think we're just consolidating. But I would watch 8650 support, and then also keep an eye on that 50-day moving average, which currently is at about 85, 87, so just below 8,600. And I think the combination there should give you some pretty good support. Maybe even throw in this this gap support right here, which is just below 8,500. All of that. Then we could probably also do a trend line, which comes in off of these lows, probably around the 8,600 level as well. That's going to be a good area of support, I think, on the transports. And while I'm not a big fan of the airlines, I think they've still got a lot of struggles ahead, both fundamentally and technically. I am a fan of the truckers and the railroads. I think both of those will do well, but they will continue to do well. Okay, so let's go ahead and take a look at some of the different areas within the transportation area. So let's start with the truckers. So here you got truckers. I think it's pretty clear that since the March low, I mean, we not only went back and got all the losses back from February and March, but we've broken well above those prior highs. So the truckers, this has been an area that's been very, very strong, been one of the leading industry groups, and it's an area that I certainly would consider for trades. Now, we did get a little ahead of ourselves, very overbought, pulled back essentially to about where we were when everything sold off. See how we went back down here just below 900, tested that area, and now we've started to bounce back up again. I think we're going to consolidate here between the 50-day moving average and the recent highs, but overall, I really like what's going on here with the truckers. Railroads. When you look at the railroads, not quite as bullish as the truckers, and you can see right here, we topped at this gap resistance area. So I think after topping there, we've pulled back, got a double bottom in here. I wouldn't be surprised to see the railroads move up from here. I think also if you connect these lows coming across, got a pretty good trend line there. So I'm expecting a rally, and I would look for railroads maybe to make another run up here for 2,600 and eventually take out the February highs. So railroads, truckers, I'm liking both. Airlines, I'm not quite as convinced with. It took a while. I mean, even the airlines didn't bottom until mid-May. Everything else pretty much bottomed in mid-April. So the airlines were slow to react. When they finally did get going, they helped the transports for sure. But we've pulled back now to an area of support. We had a lot of resistance between about 130 and 135 on the airlines index. We got all the way up to 180, and we came back down into the low 130s and finished just above 140 on Monday. So I think the airlines, this is going to be a key area. I think in order for the transports to go back down to the support level I showed you a couple minutes ago, I think it's going to require airlines to go back down probably to this 130 area, maybe even down to the 50-day moving average. So that's going to be an area that I would watch for pretty closely. But overall, when I look at the transports as a whole, I really like the truckers, really like the railroads. Airlines, I think, are going to continue to be pressured a little bit. Eventually, I think they'll be okay. I just think it could take a while. I think there's still way too much uncertainty with the virus and the direct impact that that has on the airlines industry. All right, let's move on. I talked about break it down, so let's get into break it down. I want to look at the truckers, show you a little bit about the truckers, what's going on here, and how, when I come up with an idea or a theme, kind of walk you through some of the things that I would look for. So when I look at the truckers, this is relative to the S&P 500. So from the end of October of 2019 through the beginning of March of 2020, you can see that truckers were underperforming. But we did rally very nicely in March, April, May, and into June. June, we kind of pulled back a little bit, but I still see a very nice uptrend in play here where truckers have been outperforming, and I expect that that's going to continue. So on this relative pullback, I think it's actually an opportunity. I think if you see the truckers take a big relative drop below this 0.3 level, take out this double bottom, really a decidedly big move to the downside, then I might be a little bit more nervous, maybe have to reevaluate. But I'm expecting the opposite. I think we've got this relative PPO test now back at the center line. So all of that relative momentum has now been stripped out of it. I wouldn't be surprised to see this group begin to pick back up again in terms of momentum, just because it's been such a strong group over the last 3 or 4 months. So once you see something like this, or once I see something like this, and I see that the truckers are outperforming and have pulled back, and I think, okay, well, maybe there's some truckers I want to, get involved with here. What I would do is I would simply go back to my dashboard and I would run a simple scan. You can set up a new scan. Now it comes up, I'm going to be looking for a stock, so I'll go ahead and leave that. I normally want to make sure that the volume over, say, the last, 90 days is at least 200,000 shares. So over the last few months, a couple 100,000 shares. And then another cool feature here is you can just go in and run a scan against an individual sector or an industry group. So if you go down to industrials, you can find the trucking group right here. Click on that, add the truckers. And so now you've got the trucking. So now it's going to go in and look for any stock in trucking that has a simple moving average of volume over the last 90 days of at least 200,000 shares. I like to find leading stocks within leading industries. None of this is telling me that I'm going to get a leading stock. So in order to find those relative leaders, what I would do is I would add a scooter filter. Now, for those of you who are not familiar, scooters, that's an acronym, stands for StockCharts Technical Rank. This was something that was developed by John Murphy years ago and is applied to most every stock at StockCharts. And essentially what you're doing is you're looking over roughly the last 5-6 months, and you're trying to find stocks that are among the leaders in terms of relative strength within its asset class. So if I go down here and I pull up the scooter and I say add it, the default is 90. Now, I don't know if I need the top 90 percentile, but I probably want the top quarter, which would mean scooter greater than 75. So if I run a scan like this is giving me every stock that averages trading at least 200,000 shares in the trucking group with a scooter score, relative strength score, that's above 75. And so this will give me some of those leading stocks within a group that I already feel like has been a leading industry. So let's run that scan, see what it brings up. All right, here are 5, 8, 10 stocks. That's a very manageable list. And you can sort it in scooter order so that you can start with the top. But here's Old Dominion Freight Line. I think the stock looks good. Beautiful run up. Took out that February high. Has pulled back. Nice little reversal there. Went below the 20-day moving average. Kind of tested this breakout area right here. Continues to put in higher lows. Came back up above the 20. I think this one's consolidating, but still looks very healthy. So ODFL definitely would be a stock that I would be interested in. And we could do this. We could go right down the list and look at all of them. Not going to pull up all 10. But USX, US Express Enterprises, nice breakout here above this prior high at 475. Came back down, hit the rising 20-day moving average, bouncing. It's got a couple resistance areas. A little over 6 is your first, and then 650 is the second area. So we want to make sure we can get through both of those levels. And when we do, actually that's 650 area, very, very strong resistance area. If we get a break above that, that would be extremely bullish there. Let's take a look, maybe a couple more here. Werner Enterprises is actually one that's in one of our portfolios, pays a pretty nice dividend. And I'm okay. It did fall back on some pretty good volume recently, but I think as long as it holds this support area. So you see that this top and how we pulled back, went back up here, consolidated right around this level, got significantly above it, maybe 12, 13% above that 39.40 area, went all the way back down, tested this area, bounced to a new high, and then came back down and put in this 39.5 low again to test support. And now we've rallied back up to this 44 area. Now, when I look at this chart, I would be careful if this stock breaks below $39 from a trading perspective, because what I'm seeing is potentially a topping head and shoulder pattern. Left shoulder, neckline, head, right side of the neckline, right shoulder. And if we break below 39, 39.5, then we lose this support area. And if that's on big volume, that potentially could measure down about another $7 or so to about 32. Now, I'm pretty bullish truckers. I'm pretty bullish the market. So I don't look for topping patterns. And I wouldn't look at this chart and say, oh, I'm going to sell because there's a topping pattern. Topping pattern is only good if it is confirmed. And it doesn't confirm until you get that breakdown below 39. All right, so Werner would be one that I certainly would be watching closely here. And let's see, how about we do one other one. Let's take a look at JB Hunt, because JB Hunt is on the verge of a really nice breakout here. You can see the tops back in November over the 120 level, tested 120 again back in January. And then when we fell back here in February and March, JB Hunt actually saw its accumulation distribution rising, which I think is a good sign. That to me is an indication that we were getting some accumulation in the stock. I think institutions were accumulating, and that certainly seems to have played out as well as we continue to move higher. Now, we had this triple top breakout, this gap up. We have not filled this gap, so I think as long as this stock stays above about 108, I think we're good. That's your 50-day moving average, your gap support. I think we're simply sideways consolidating here on JB Hunt, and I would be looking for that breakout above 122.50. One problem on this stock was back on June 8th, you could see this breakout, or what appeared to be a breakout, but look at the volume on June 8th. It was one of the lightest volume days. That's not what we want. We want to get that breakout, and we want to get it on increasing volume. We didn't see the increasing volume. That set up a failure, but I do think that this gap support area is a nice area to see that rebound and eventually get that next breakout. All right, let's move on to chart breakouts. And I tried to go through, I mean, there are a lot of software stocks, probably stocks that you're very familiar with, that have just seemed to be breaking out almost every day. I tried to stay away from those for the most part and look at some other stocks that maybe you're not focused on quite as much. So I'm going to start off here first with Halozyme Therapeutics. After a beautiful move up in March and April, and even into early May, we've been sideways consolidating. Notice now that we've had multiple tests down in this 22.5 area. We bounced off the 50-day. You see the PPO come all the way down to the center line support area. And now just over the last week or so, look at the push to the upside, look at the volume pickup, and now we've got that PPO from the center line just starting to take off again. I think this is a really interesting breakout here on Halo. I would watch down to the 20-day moving average. If we pull back, I'd expect a little bit of support just above 25. If that fails to hold, maybe we'll get a 20-day test. I don't think we're going to go back and close below that 20-day, though. So I like Halo on a pullback. Another chart breakout, how about TRUP? This is Trupanion. Had the big breakout here in mid-June above the prior high that was established at the beginning of the year. Tried to pull back a little bit for a couple days, consolidate. But look what happened on Monday. Nice big move to the upside. Look at the volume pickup. I think this is a stock now that clearly is trending up. When you get a stock that's going sideways, Do you see the move below the 20 and the 50-day? And then we go up above it, and then back down below it, and then above it, and all the way back down below it, back above it, below it, back up above it. See what, anytime that the moving averages are kind of going sideways and price action's going above and below, you really have a directionless stock, a stock that just doesn't have any trend. And so moving averages don't do much to hold as support. But once you get into an uptrend, and I think we've got one here, you've got the PPO looking very strong. It hasn't looked this strong since all the way back in first half of November when it was in this nice uptrend. So I think we've got an uptrend established. And normally what that means is when you pull back to a moving average like the 20-day, just like we did over here in December, that usually is going to bounce. You're going to bounce. You're going to hold that and move higher. And that's what I'd be looking for. Any kind of a pullback. I think you've got really good support around 37, and you've got this rising 20-day, rapidly rising 20-day now. That should offer support as well. So TRUP, I think, looks pretty good. Next up, this is HOLX, Hologic. I mentioned this one on the show I did over at Earnings Beats on Monday morning, but I love this sideways consolidation after big drop, big recovery. There's your V-shaped bottom, and then sideways consolidation here for 6 weeks, 7 weeks. And then finally, look at that breakout and the follow-through, a little bit of follow-through on Monday, but the breakout came on Friday. I suspect now we are definitely going to be trending back to the upside. I shouldn't say definitely. I don't guarantee anything, but this looks really good to me. I do like this breakout. I like the fact that we're getting the PPO to turn back up just above the center line. I think this one's ready to run. SPRO, probably haven't heard of Sparrow Therapeutics. But check out all the highs around $12, $13 going back literally the last year. Just kept trying to get through, couldn't get through, kept pulling back sideways, consolidating, holding 11.5, maybe even down to $11. Well, this now is looking like a breakout. Another one of these where the PPO has been dwindling while it's been consolidating, and now it's making the breakout, and we're getting that PPO to turn back to the upside. Now, this one is not a huge volume stock, so it might keep a lot of you out of it, probably would keep me out of it, but I still saw it. I liked it. I just wanted to show you that it does look like it is beginning an uptrend here. Hain, H-A-I-N. So this is Hain Celestial Group. And I believe, well, I'm going to pull this up in a relative chart. Yeah, this is in food products. So food products overall, if you go down here on a relative basis, has been declining since April. But this is a stock that's a leader. So if I ever get into a group where I'm not overly confident about the group, not quite sure, I want to make sure I have a leader. Hain is definitely a leader. Not only is it leading food products, but it's been leading for the most part the S&P 500. So it's been in a group that's been underperforming the S&P, but it's outperforming the S&P because of its leadership. Also, nice move up, equal highs coming across, rising lows. I see an ascending triangle, and I see that breakout on Monday. So Hain, I think, looks pretty good. And then the last breakout I wanted to show you, this is a biotech. I really like the biotechs right now. 6 days in a row that Alnylam pharmaceutical has moved higher. I think it's got room to go simply because it's consolidated for so long. But look at the relative strength all of a sudden turning back to the upside. And this is a stock that's been leading biotechs for quite some time. You know, goes through periods where it consolidates, but generally it's higher high, higher low, higher high, higher low, higher relative high, higher relative low. Biotechs, though, as I mentioned, very strong. Look at it breaking out at the end of last week and starting to show relative strength again. Had huge relative strength from February to mid-May, took a break, now starting to show relative strength, and this is one of your leaders with volume coming in. I like that breakout on Alnylam Pharmaceuticals. I'm probably butchering the name. All right, let's go to earnings spotlight. Show you a couple of earnings that are coming up. All of these companies, any of these I talk about, are coming out on Thursday. Not really a whole lot of earnings this week except for Thursday. Nike is consolidating. Nike got up to 105 to challenge that January high, backed off of it, been consolidating. Maybe it can get through with its earnings. I want to see it first. This is clearly one of the better stocks in the footwear space. You can see that we had a huge run back at the beginning of the year, first quarter of the year. Second quarter, though, we've been drifting lower on a relative basis versus footwear. So Nike's going to have an opportunity on Thursday. We'll see whether or not it takes advantage of it. Accenture, ACN. Accenture, been in a nice uptrend, continuing to hold for the most part its 20-day moving average on these pullbacks. It is in that software space, which has been so strong, and we'll see whether or not the earnings can lift it up and above that February high, which is up near 215. Still got a little work to do there. McCormick, whoops, wrong symbol. McCormick MKC, this is a staple stock, but you can see very strong. Into May, broke out above the earlier highs, went to a 52-week high, pulled back for a little ways, or a little bit of time, but now is starting to turn back to the upside, back above that 20-day. They've got earnings coming out. I think Wall Street setting up for what appears to me to be a pretty good report. We'll wait and see. FDS, this is FactSet data, or FactSet research. You can see the pullback recently down to the 50-day moving average, turning back up. I think we're consolidating, but earlier in June, we did take out that February high, so I think that's good news here, and we'll just wait to see whether or not we can get the breakout with earnings. The last one I wanted to mention is Darden Restaurants, DRI, and some of the restaurants have done well, some of them not so well, and when we look at this on a relative basis, you can see Darden relative to the restaurants starting to roll back over again. We did lead off the bottom after a huge tumble back in February and March. I mean, clearly, this was a restaurant that the market did not like with all the coronavirus as it drifted down, not only on an absolute basis, as we saw up here, but on a relative basis. This one was really hurt. So it started to come back a little bit, but now appears to be rolling over again. This will be an interesting earnings report to watch on Thursday. All right, let's move on to the final segment, 3 you must see. First one I want to bring up is Chipotle. Speaking of restaurants, let's just jump into Chipotle. After a big move down on Chipotle, and I'm going to pull this up on a relative basis as well so we can see the relative strength. You can see that Chipotle, relative to the restaurants, went down initially and then came right back. And as it started moving back up and rebounding, it also broke out to a new high versus the restaurant group in the second week of April. So, and look at it just continue, just set another new relative high. Look at up here, we just broke out to a new closing high. Now, we didn't take out that candle body from May 26th, but we did close at a new high today, all-time high on Chipotle. So that combined with this increasing volume and the relative strength, Chipotle continues to be one of the best stocks in the market, in my opinion. And that's why, as I said at the top of the show, it's continued to be one of my favorite stocks in the market. And one of the reasons why it continues to stay in our portfolios at earnings beats. Next up is AXNX. AXNX sideways consolidating off of this uptrend. I'm waiting for this breakout above $40. I think it's coming. It's in the medical supplies area. I've talked about how the healthcare has been consolidating. Well, as a result, many of the stocks within the sector have been consolidating. This is one of them. But watch for that breakout above 40. I think that would be a great sign of higher prices ahead. And then the last one, this is a small semiconductor company that was really leading back from the March bottom through the end of April, big volume, but we've been consolidating, equal highs up around that 575, 580 area. And now look at these lows down at about 470, 465. We're right there. Now, maybe we bounce off of this. Couple things here that we have to be careful. We're trading below the 20. We went up and tried to get through the 20, failed, rolled back over. I would be watching a couple things. Do we hold 460, 465? If we do and can get back up above the 20, I think that would be very bullish. But if we can't get through the 20 and you see the volume pick up and we move down below 460, I think you've got to be a little careful here with this one. So AXTI, and it was a great relative performer to the semiconductors through all this volume. But since then, and maybe it's just consolidation, but since then, the relative strength has failed. We want to make sure that that price support holds. All right, that is it for today. I appreciate everybody tuning in. Again, go over to earningsbeats.com. Sign up for that free Earnings Beats Digest newsletter. Would love to have you. Have a great day. Have a great Tuesday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.